Gerald, thank you for joining us. You're becoming somewhat of a regular on news about this matter. First of all, how long does it take for this change to make a difference for locals?
So for locals who have a variable rate mortgage, the effect will be immediate. As of yesterday, their interest rate have gone down by 0.25%. For those on a fixed rate mortgage, the rate will be adjusted once their fixed rate product matures and they go on to the following product or variable rate for that for the case maybe.
And can we expect interest rates to continue to go down? Obviously, they've held for a very long time. Is this the start of that going down?
Well, that's a very interesting question, actually, because the vote today was very narrowly split. It's a 9-member committee, and the vote was split 4 against 5.
And that's a vote from the Bank of
the MPC committee. So it was very, very narrowly decided by one vote. So it's clear to say that the path of interest rate is not clear as of yet. I don't think interest rate will go up, but the speed at which they go down is yet to be seen. Inflation will play a key role in that deciding factor, and we'll need to see how the UK economy fares over the next few months to see whether or not interest rate will carry on going down this year or in the next few years. I think this year we probably can expect one more cut before the end of the year, and then depending on how the economy recovers and how inflation persists, then we will see 2024 and 2025 and 2026 interest rate carrying on down. Some economists are saying we're looking at 3.5
as where it will stop going down.
But that is, we're talking about probably 2027.
So still some time to go, a very slow decline if it does go down. Okay, what would your advice be for those who have perhaps held off on getting a mortgage or securing a particular saving rate because they weren't sure when these rates were going to go down?
Well, for mortgages, I think people who were holding off because of the uncertainty of whether interest rates will carry on going up. Therefore, the question is whether they will be able to afford the mortgage in the future. I think it's clear that we are on a declining pace and interest rate will go down. So I think they can, like you said before, breathe a sigh of relief and look at possibly going into now mortgage. For savers, it's quite the opposite. Their savings rate will go down, so it may be wise to look at maybe fixing their savings rate for some time if they're on a variable rate, or looking at ways of trying to maintain those savings at a higher level.
And locally, you can speak from Gib Bank's experience. Are many locals on fixed rate mortgages, for example, at the moment? Have they opted for that because of the uncertainty? In which case, what will they expect? Will they still be winning?
Well, yes, actually. When the interest rates started going up and we saw this cost of living crisis, like it was called, the bank acted immediately and launched a couple of fixed rate products which were below the market rate at the moment.
How much was that?
There was various products ranging from 4 to 4.75, depending on which one you were on. And those people are still way below base rate. Their product will probably mature in the next, depending on when they are, 6, 12 or 18 months. And then they will see that we need to make a decision depending on where interest is at, whether to fix the rate again or whether to use a variable rate and take the benefit of rates as they come down.